All right, yo. Hey, sorry guys. What can I say? YouTube wouldn't work. Just wouldn't work. 15, 20 times I tried changing the ingestion settings and all this kind of stuff. It just wouldn't receive. And all I was trying to do is broadcast to the pre-scheduled event. It just wouldn't do it. Would not do it. So anyways, this is a live new event. So forget about the one that's scheduled. We'll just do this live one and we'll go from there. So anyways, shame on YouTube. Let's go! Hey, well, if there's still people over at the other one, let them know. Anyways, hey, let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Ni hao ma. Hi, my name is Wayne McDonald. I'm the Chief FX Market Strategist for TradersWay.com. Nice to see you. Please visit TradersWay.com. Open an account, download MT4, play some trades, test the execution speed, check out the swaps, check out the spreads. You'll certainly be happy. And then perhaps if you learn a few things in these webinars and you start to develop the skills and the confidence necessary to trade successfully and profitably, well, if you get to that point, perhaps you'll choose Trader's Way for the prime broker to your new successful Forex trading business. Simply pay it back. Yeah, sorry, Ron. Yeah, we're over here. Hey, thank you, YouTube. Maybe if they had an extra $100 billion, it would work properly, but I just could not get the event to stream. It would not stream. Reboot this, reboot that, redo this, check this, change that. Would not do it. So anyways. All right, so whatever, let's move on.com. Nice to see you. So let's start with a really interesting one, the Aussie, only because it's the most perfect example, so why not talk about that? Okay, check this out. We felt that December would be straight up for Aussie. Then we thought January would open straight down. Then by the middle of January, we would have a very significant rally, but we called it the false rally. And by I say we called it, I mean in September, in October, November, we had the Aussie yen to go up. Then, starting the first week of January, it would have a very significant decline, and then a full-bore rally all the way back to the top. But don't believe the rally. Don't believe the rally, right? And that it would be a false rally. And then, boom, check that out. What an interesting month, huh? The full Monty. Huge drop, huge rally, huge drop, and now a lower low. Very interesting, huh? Now, every year it's something. Every year it's something. And I thought it was going to be the assassination of the Iranian general in Iraq by the United States. It seemed like it could be that. And in particular, maybe a retaliation for that. In this case, it seems to be the coronavirus out of China. It's spreading. That's not good for business. Right? Zombie apocalypse, not good for business. Okay? So anyways, so focus is it's like a bat or a cipher bet. I don't care what the pattern is. The important part is we talked about it in June and July, and then prepared for the huge rally in August, and then carried out the rally in August, September, October, November, and then between Thanksgiving and the New Year started exiting all the long trades, and then by the first week of January shorted it hard, then expected a rally, but that it would look like it was going to recover everything, but that's why we call it a false rally. It won't, and that there would be a significant retracement back into the range, and in this case, oh, for sure. So Max says, so from here, now what? Well, what is your plan, Max? That was my plan. Okay? All I'm showing you is it's plannable. Okay? So you have to have a bias, a logic and a reasoning behind the bias, and then you can create trade plans to enter into that bias. So that was my alpha. So what you're like, so what do you do next? What is next? Okay. Okay. All right. So in this case, right now, I am still risk off. Why am I still risk off? Because nothing has told me to buy yet. Okay. So here's my sell zone. We're still making a low. I'm short here. I'm short here. Now we got the February move. It's still in play. Okay? What do you mean it's better? Whoa, didn't mean to do that one. Okay. So we're already on tomorrow's trades. That's right. Grind says it's right. My job here isn't to tell you what to do. My job here is just to prove to you over and over and over again that A, if you have a bias, then you're able to plan on entries in the direction of your bias. And then, did I do A, B? Then C, the secret to your success is not going to be how right you are. The secret to success is how consistent you are. Right? And I think that's what Grind is kind of reiterating. Okay? And I would agree with that. Okay? So, anyways, let's move on.com. So if you're day trading, tomorrow's trade is already set up and you're already a bit late. Yeah. Oh, you know what? I have the new one. Next project. Oh, this is the new one. I guess it's updated itself. Check this out. The next projected sell zone. So now this indicator is not calculating today. It's calculating tomorrow for you. So it's saying today you should probably be selling 142.38 to 142.54. Isn't that cool? So right now the top is only about, yeah, well, anyways, about that, right? All right. So, anyways, where do we want to go? All right. So, if I were risk off, what would I think about oil? If I was risk off, what would I want for oil? What would I expect for oil, not want? Molly says, get ready to buy long. That's not the question. If I was risk off, what would I expect oil to do? I know what you're saying there, Molly, but it's not the answer to the question. You're telling me what you want it to do, what you think it will do. Okay? So, no matter how bullish you are, you got to be very careful. So, what does that mean if you are a bull? Oh, where did my thing go? There we go. So if you were a bull, like Molly's saying, well, you're going to need some pretty big confirmation. Okay? If you're a bull. But that's not the market we're in. So when I say if I believe it's risk off, what am I expecting? Well, you got to carry this through. You got to carry this through. You got to carry this through. Right? So you're expecting this, or you're expecting this. Okay? So right now we have pivot points, but remember, this had to do with December. Are we still dealing with December fundamentals? No. Okay, the world has moved on. We're already in February. Okay. So let me fatten this drawing tool up. So we had this nice move up. That was cool. Then we have the lower low, right? Lower high, lower low. Okay. And we're looking for some sort of pattern. Now, if it's fundamentally, if we have new fundamental information, then we could, instead of getting the pullback, we can make an extension lower, which then changes the technicals of everything. Oops, I didn't want to do that. Let's go to the daily. So let's see if I can plot this. If this is a big fundamental move, it could be like this exogenous demand shock. Now, not an exogenous supply shock, an exogenous demand shock, which is actually quite rare. But we could just blow through this bottom because this had to do with analyzing what happened in December. Well, who cares about that? So if this breach is lower, you get this out of position kind of setup. Okay? Which means we would drop pretty hard actually, and that anticipates a drop all the way back to 45. Well, the only thing that could do this, the only thing that could drop us to 45, right, is a fundamental fundy demand destruction. This, it would have to be very significant. Destruction. I don't think I have any of that spelled right, but anyways, I can't think and write at the same time. Okay? My point here is stop thinking technically. Okay? I want to know why. Okay? Don't tell me technicals. Don't say, oh, it has to do this because we're at this pivot point and Wayne's books it. No, no, no. Everything starts with fundamentals, especially if you expect to get below the 50 handle on oil. You better have a fundamental reason why. And the fundamental, the thing to destroy fundamentals, let's do this. Let's try to attack this from a different point of view. Let's do this. Template, blank. All right, let's do this. Delete. Okay, quantity of oil, price of oil, oil. I'll just put oil. Okay. And this is your demand curve. And I'll do a different color. This is your supply curve. Okay. So in webinars past, I've talked about an exogenous supply shock. Okay. That can happen. That has to do with like geopolitical risk and all that kind of stuff. That's a threat to supply. Demand is typically constant. Okay, because oil that was needed yesterday is likely to be needed tomorrow, and there's not a lot of volatility to demand. But every once in a while, and it's quite rare, there is a change in demand. And it's sudden. And remember, it's not that there is a lack of demand, it's the expectation or potential of lack of future demand that really matters, okay? And this has to do with if the coronavirus spreads. So China slows down. Now, that's supposed to say China. I can't see that. All right, so China, in response to the virus spreading, they've shut down a city. Is it a major city? It's a big city, but for China, it's not a major city. They want it to be a major city to take pressure off Shanghai, but right now it's only, half the size of Canada, population-wise. Tiny little city of 11 million, right? But the thing is, they're doing things like extending holidays, right? Extending holidays. So they're telling people right now, don't go to work. Okay? And then they're even asking some people, like, don't go to work for weeks. They're shutting down schools. People are not leaving their homes. All of this destroys economic activity and thereby destroying demand for energy. Factories are being shut down. Schools are being shut down. Offices are being shut down. Okay, not good for economic activity. And then if this expands out of China, so the first thing you're going to see is it's going to hit like Hong Kong, and then it's going to hit other countries. People in London will suddenly get it. People in the United States will suddenly get it. And even if it's like 80 people out of like 2 billion died, you're like, well, more people died on the road that day. More people died in China riding bicycles that day than 80 people. But it's still pretty scary, and it's going to hit the media. And if it starts to spread and more people get infected, okay, you've seen all of the movies, right? We're only like 19 days away from total destruction of humanity. Well, that's all very bad for economic activity. And that actually destroys demand. And like I said, that's pretty rare. It's a pretty rare thing for demand to be destructed. So that does not shift demand along the demand curve. It shifts the entire curve left. Okay? So the old equilibrium price for oil, right? Here's the demand. So here's Q1, quantity demanded in a normal economic market. And there's the price for that quantity. But if things continue to go poorly, right, there'll be less economic activity, There will be less quantity of oil demanded, and the price will fall. Okay? And it's very unusual. Exogenous demand shock is quite, right? So Mr. Highvolt says, now we got 35 million people quarantined in 12 cities. Right, but Shanghai is 25 million. But still. Can you hear me? All right, well, very nice. So all of that, okay? So all of that in the back is the back of my mind, and I can simply now say until further notice, risk off. Okay? So now Max should be able to tell me my next 7 trades based on risk off. Okay? That should tell you what I think about the stock market. That should tell you about the bond market. That should tell you about commodities. That should tell you about the yen. That should tell you about the Swissy. That should tell you about the dollar. At a bare minimum, you should know what to do with all of these things. Okay, John says, CAD will fall with oil. Well, let's think about it, John. Okay, let's think about it. It's too easy to just tell you. Okay? All right. Canada. Okay? Do they import or do they export? Cool. So they export. So they sell things. Right? All that means is they sell things. Okay? Yes, they sell oil. They sell gold. They sell diamonds. They sell nickel, copper, uranium, right? Wheat, oats, barley, flax, beef, cars, financial services. You get the idea? And they sell it all to the United States, basically. Pork. Sorry, Jean-Guy. Right? Wicked hot women. Wait, that's not an export. Sorry, it's just an asset. All right. Yeah. Anything else? Maple. Hockey. Yeah. Yeah, the other football. Okay? So, how about this? What happens if there's less demand for oil, gold, diamonds, nickel, copper, wheat, barley, flax, beef, cars, pork. What happens when prices fall? Does Canada benefit? Yeah. So John's like, oh, prices fall. Yeah, yeah. All right. So if there's less demand for all this stuff that Canada's selling to countries, if there's less demand, prices fall, right? I just showed you in the oil, demand falls. Remember, we shifted the entire demand curve from D1 to D2 to the left. Prices fall. Does Canada benefit? Because think of it, there's less demand for the Canadian dollar. What does that do to the value of the Canadian dollar? Right. Was that helpful, John? Cool. Now you know. Now you own that knowledge versus me just saying down. Okay? All right, on, Daniel. Okay? Now, that being said, you can be a bull. Absolutely. I'm not trying to tell you to be a bear. Because we don't know to the extent of which the virus matters. Okay? So if you are a bull, it's pretty easy. It either goes up from here or you're going to consider maybe around 50. Okay? But you don't even think about 50. You're kind of defending this. And if you know what you're doing, you're on the line right now. For this is it. This is your Alamo. The second scenario, which I already showed you, but I want to remind you, this drops OP, and you'll find yourself in a week, maybe 2 weeks, doing the counter. Okay. Oh, which reminds me, shameless plug. Join the swing trading group today. Swing.fxbootcamp.com. You can start taking the swing trading course. And we trade as a group live together. So you learn monthly and weekly swings. Okay, great. Also, in a couple of weeks from now, so that would be within your first month of membership, I'm going to record an entire day trading. Over the course of, like, we'll meet on Monday, then we'll meet on a Tuesday, then we'll meet on a Wednesday, then we have our normal meeting Thursday. Okay, so you'll have 4 meetings. Boom, 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 boom. So that now you'll know how to day trade. Okay? Day trade and swing trading for the same price. Okay? How to plan tomorrow's trade today. Okay? And there's a quirkiness to how it works and how I've been trading it since probably 2002. Okay? So what is that, 27 years now? I can't believe it. So anyways, no, 17 years. Anyways. So join that now if you want to double dip. Okay? Swing.fxbootcamp.com. All right. Oh, hello, little birdie. I don't have no food for you. Why? What do you mean? He's looking right at me. No, I don't have no food. It's a little bird with a little red head. Just, He's on my window, and he's like, you need to feed me, bro. So anyways. Cool. Thank you for subscribing. Oh, data scientist, that's intraday trading. That's going to incorporate market open, high volatility, event-driven strategies, and then straight up scalping. Okay. Trading in a hotel must be nice for you. I actually have a setup. Where is it? I got them packed away. I don't know why, actually. Where are they? Yeah, so I actually have a setup. I have a setup for travel, and so I have my laptop. My new laptop I still love. I was using it last night at Starbucks when the market opened, and I love this laptop. The Windows is sitting on top of Linux. It's ridiculously fast. I have a jumbo amount of RAM on it. It's super light. It folds into a tablet, and it's got an OLED screen. Like, it's sick. Love it. But when I travel, right? When I travel, I have two external monitors, but you don't have to plug them in, the power. You don't have to plug them into the wall. They gather the power from USB. So I reach into my bag and I grab a little thin laptop and I pop that open. Then I grab a second monitor, pop that in, just like you just pop the stand out, plug that in. Now I got two, right? And then I grab my bag again, pull a second monitor out, boom. So now I got triple screens. Triple screens. And people are like, damn! So I remember I was speaking on a panel in, I think this was in Toronto. So this was like 8 years ago. Imagine this, 8 years ago. I sit on a panel with all these other experts. I think one of the guys was from Cyber Trading University or whatever his name is. Faust or something. I don't know. Anyway, so I'm sitting right next to him and he pulls out his laptop. I'm like, oh, right. So I'm like Dr. Evil on him. I pull out my laptop and he's like, you brought your laptop too? And then I'm like, brought out my second monitor, brought out my third, and I'm sitting there up on stage and I got triple screens right there that I pull out of my bag. And everyone's like, damn, what is that? I'm like, oh, that's my awesomeness. I'm sorry, did I get some on your shoe? So anyways. Steven says, oh, really? Another one? What type of laptop? Yeah, Lenovo. Where's my bag? Oh, I was going to bring it down. No, my laptop's upstairs because I was at Starbucks last night. Yeah, but oh my God, it's nice. I love the laptop, and I don't really love things that often, but every time I use it, it's so bright. The colors are redonkulous, and it's so black. It's black. It's amazing laptop. Anyways. Yeah, that's the new one. Yeah, it's like, I don't remember what it costs. It's like $4,000 or something. I don't even remember. But you're like, damn, it's nice. All right, so let's move on. All right. Up, down, buy. Up, down, buy. Up, down. What the hell do I do now? Help me! Well, this predicted that, and we call this, oh, come on. We call this price action. You got a problem, Max? What's up, fella? you got something to say, Max, say it. Let's go, brother. Okay. So here's Bitcoin. Okay. If you're a bear, you're going to look this way. Okay. If you're a bull, you're way late, ridiculously late. So you're going to have to wait for a breakout and then the pullback. Okay? Oh, Lucas is what? Yeah. Installer says, hey, by the way, for all those on MetaTraders, if you log into MetaTraders right now, there's MT5 files on most of the downloads now. So when you click on your download, it'll say MT4, right? It says download. It's one button says download MT4, and the other one says download MT5. And we're adding more and more and more every day. Yeah, Heath says, yeah, not at the moment, but MT4 shouldn't be confusing, so we should fix that. Not that you don't have, feel free to use, okay? But anyways. I still don't understand why I need to. Like MT5 is for what? Following signals or something, right? Like, I don't know why I'm supposed to shift up from MT5 to MT4. But I'm not really holding back. I don't know why I need to. So there's a disconnect, obviously. All right. Okay, boomer. But anyway. Okay. So here's gold. We know you can't buy up here. Oops. You know you can't buy up here. So the only thing you could do is set up the sell if you're a bear. Remember, none of these technicals never tell you what to do. Most of the time, they just tell you what not to do. So if you're already a bear, this is great. If you're a bull and you're like, Wayne, how do I get into this? I'm like, why didn't you buy down here if you're a bull? Well, I didn't know it was going to go up. Well, then you're not a bull. You're confused. Was that Lucas says you can undock the charts? Yeah, that's cool. Okay. So like, here's a proper swing, although it's so elevated, it's very difficult, right? But here's last week's buy. Here's this week's buy, okay? So like, when you say to me, I'm a bull, and you didn't buy here, and you didn't buy here, and now you're all excited about buying up here, I don't get you. You don't make any sense. Right? That's the whole thing. Like, as a bull, you're already done for the entire week as far as I'm concerned. Right? So that's why I simplify things, as crystal clear as possible. You cannot buy up here. So therefore, the only thing that exists up at that price is where bears would set up their trades. and they're going to look for moves like this, and they're going to take it down, and 1543 is their target. Okay. Okay. Does that make sense to you guys? And I've been saying sort of lately, like, yeah, gold is just boring, right? It's just boring. But there's no doubt there are traders on it, right? So very clear swing trades, but nothing to get excited about. Jimbo says market open knocked. Yeah, I could see that. That was a wicked open for sure. Also, there were a few things at the market open that had significantly wider spreads than normal. And that can happen, especially around unusual risk events like what we're having, right? Cool. So right now, the big trades here right now that are working well for me is the Kiwi, Swissy, and its cousin. It's the opposite, but exactly the same. Aussie. Okay, and it's accelerated its profit. Okay. So those are the two best ones. Now imagine you got a lot of follow-on trades. Okay. Right? Down, 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 up, up. See the sell zone? Sell. Down, 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 up, up. See the sell zone? Sell. Right? Down, 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 up, up. See the sell zone? Sell. Down, 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 down. And here's the new sell zone. Okay. But this is often, when you get this accelerated move, this is where I say it's OP into a counter trend. So you got to be very confident that you're going to go lower, right? You got to be very confident. In this situation, with this extension, I think you're going to get lots of profit taking, and the profit taking is what leads to the counter trend. So this could be a big profit-taking day if you believe, let's say, people are over-concerned with the virus news. Okay? So remember what I said at the beginning of today's webinar. Always be worried about why. Don't trade only as a technical trader. You don't only buy at M2 because the trend could be down and you're buying at M2. Well, I've never said that. I said buy at M2 when it's up, right? And then behind all of this, there's a why. Okay? Now, this yen strength, I had built this up for you guys based on seasonality. And the interesting part about that is it's all Y and no technical analysis. Do you guys remember that? I don't know if it was, I guess, December. You guys remember in December where I said the yen, all these yen pairs are going to fall and there's nothing on the charts to indicate that it's going to happen? How many people remember that over and over and over again? There's no technicals that suggest the collapse, but it's going to collapse. Okay? Okay? That's where I'm trying to get you at. Okay? That's where I'm trying to get. It's all Y. And the Y sets up your bias. So, for example, in the next 3 months, you could boil this down to something incredibly simple like virus bad, virus bad, therefore macro bad. Okay? That's it. Now, here's the thing. I'll get to it, Raj. By the way, I'm not sure why you'd want to be trading that unless you're in Australia, but okay. Max, because it's just my job, Max. Okay. What else is an old supermodel going to do? I'm going to do the dog and pony show. Yeah, Raj, there's very little fundamental difference between the Aussie and the Kiwi. Oh, really? That's interesting. But anyways, we can go into that. Yeah, Miguel made a boatload of money. Good. Wait, so let me put that back. Okay. Why would a decision like this be important? There's only one reason. Okay? Why is this important? Do we know if the virus is really that bad? No. Like I said, 80 people died in China of this virus, but probably 800 people died riding bicycles at the same time. So we should all fear bicycles. Max, I've documented why for the last 15 years. You can go back through, how about this? Go through every August video I posted on YouTube over the last 15 years. Look at what I said this August, like the recent one, the August before, 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 and the August before. Or take any of the trainings that I've been doing, right? And you will know. Now, here's the interesting thing, right? There's a high likelihood, Max, that you won't do it. Not just you, but everybody, right? I have 5,000 videos on YouTube, right? So it's all there. It's all documented. And it's all free. 5,000 videos. Yeah. So go check it out. I'm just saying I'm helping you because I'm sure by the middle of August, I'm getting people ready. Right? Yeah, Ed said, yeah, I told everyone right in July. Right? Well, in the summer. But anyways, yeah. So, by the way, let's get back to this, guys. Focus, 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 focus. Okay? I want you to focus this. Why is this decision important? Because it's right? We don't know if it's right. Okay? But here's the thing. You've made some sort of decision. And from that, you will either get lots of profitable trades or no, very few setups. If you're wrong, you're wrong. Right? Yeah, Damien, you'll have to go to, well, the Forex.Today YouTube channel has almost 1,000. I think it's about 900. Then I did probably a few hundred on the Trader's Way YouTube channel. And then you'll have to go to FX Bootcamp channel, which has 3,000. And then I've done almost 200 videos for FX Street. Okay? You combine all that, that's about 5,000 videos. Okay? Crypto says in 2015, 818 people lost their lives. Right, we should ban bicycles. Raj says, hi Wayne, I'm thinking about going balls deep on that EuroCAD. Good, you just made a decision. Okay, I don't know what balls deep is. I'm too old for that, but makes me think of that. Is it Bee Gees? How deep is your balls? How deep are your balls? I really need to know, 'cause we're selling the EuroCAD Brixton. Wait, that's not how it goes. So anyways, I want you to make a decision. You cannot be wrong. Most people in their first 5 years lose money because they don't know what they're doing. Okay? And I don't mean they don't know what they're doing technically. Okay? You could probably trade Forex profitably having no technical analysis whatsoever. Okay? What did people do before technical analysis? Make money. Okay? So all of that is secondary. The number one most important thing is you know what you're going to do before you do it. So whatever getting balls deep in EuroCAD means to Raj, then that's good. I'm all for it. Okay? You understand? This is the thing that is holding you back. Okay? So we got to get your trading right. So if you made a decision like that, risk off, like I said, boom, you got 9 ideas. Well, let's boil this down. How many was it? I don't even know. Let's document this. Maybe it'll stick. 1, you have the stocks, bonds, commodities. Then I just get yen, Swissy, and dollar. Okay? Okay, that's it. So dollar versus, I'd say, probably 5 different things. Swissy, probably 5 different things. Yen, probably 6 different things. Commodities, gold and oil, and we can throw down Bitcoin in there. No, I'll just say 2. Bonds, 10-year T-note. I don't know if you're doing TED spreads and stuff like that. Probably not. And then S&P 500. But you could do this. It would affect globally, right? So the FTSE would come down. The S&P 500 would come down. The DAX would come down. Hang Seng, for example. So I would say, and the Nikkei, right? So you could probably do 5 other things here. So I'm guessing right off the bat, based on one idea, you would know what to do. 5, 10. Nice. Let's just make this 15, 16, 17, 18. Okay, 23. So we'll say probably up to 25 trades. I'm going to put it this way. Up to, let's get it from Mark. Let's put it on marker. From this one idea, you could probably get up to 25 individual trades right? This could be a little more. This could be a little more. Whatever. Maybe only 20. Okay? Up to 25 trades. And this is if you just did one once. But imagine you're doing, swing trading, day trading, intraday trading, right? So I bet you could get 200 trades going on this over time. Okay? But to me, there's only one idea, and that's bias. And it sets up everything else. But see, that's the interesting thing. You're like, what you're doing is you'd rather have all those trades, but you don't want to make the one idea. And the one idea is the most important thing. The secret to Forex is just one thing. And then you'll say, well, what's the one thing? And I'll say, well, that's for you to figure out. And you're like, oh my God, this is just like City Slickers. I know, right? Okay. Hey, Joe, go to fxbootcamp.com, pay some money. Learn how to trade. Okay? Simple enough, Joe. Right? That's the wonderful thing about money. I said to Harvard, give me a degree that proves to people I know stuff about economics. And they're like, okay, give us money. Okay, that was it. Wayne, am I from London? Why, yes. How did you know? London, Ontario. All right, so let's go back into here. Oh, pro says money and hard work. Yeah, I guess so. All right, so we're back on here. There's the Swissy trades. Great, 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 great. La-di-da-di-da. Okay. Well, the interesting thing, the thing I like, I don't want to get too off track, Daniel, but I like to think I have a ridiculous, sickening work ethic. Okay? Very few people I've ever met have the same attitude toward life. Very few. But you know, the one thing that has the most ridiculous work ethic ever, something that works harder than any human, works harder than any machine, 24 hours a day, relentless, never takes a break. Does anybody know what I'm talking about? Bees works more than bees. Makes bees look lazy. The heart, lazy. Ants, lazy in comparison. Money, thank you, Juan. Money. Money is like having employees. How many people here consider themselves entrepreneurs? Okay? If you're a real estate broker and you're like, hey, look at the closets, isn't it an amazing space? That's not entrepreneur. If you work as a real estate broker for a firm, you're not an entrepreneur. If you bought the firm and you got 20 brokers working for you, you're an entrepreneur. Okay? Right? As an entrepreneur gets going, they get money. Now we get to types of entrepreneurs. One spends the money. They remain poor, but they probably have a kick-ass car. But they're poor. Okay? And then there's the other entrepreneur that has a dream, has a vision, knows what the impact is, has clear, concise goals, and gets money to work for them to achieve those goals, and they expand. And money is the same as an employee. So you can first thing you should probably do is surround yourself with other like-minded people, and then share the vision with them, get them working for you, right? But also money does that too. Money does that. Okay? So the ridiculous work ethic is important. I don't know any successful lazy person. None. Honestly, none. Now you have to define what success means, right? Whatever it means to you. Right? But then farmers have a ridiculous, sickening work ethic. The guy that runs the Chinese restaurant down the street from you has a ridiculous, sickening work ethic. So you got to take the other side, right, Daniel? And say, now that you're a Forex trader, you're an expert in money, and this money will work for you 24 hours a day, 7 days a week. And money doesn't ask for holidays. Money doesn't come to work drunk. Money doesn't sleep in. Right? Money doesn't get jealous. Money doesn't cause problems. Money solves problems. But if you're full of problems, money will exasperate them. Right? If you're a fool, you'll take your money and buy a super expensive car or put some sort of dopamine into your nose or into your glass. I'm not happy with all this money, so I'll convert it into alcohol. Hey, I do a bunch of that. I didn't say it was good. Right? But what you should do is put that money to work. So Daniel, I think you said you're fairly young. I want you to think of the meaning of life here. And the meaning of life, whatever that means to you, needs to be funded with money. Whatever you want to do with the rest of your life, it's going to take money. So what most people don't understand is they think having a good career or something, which is fine, I suppose, and you have this, right, you get this money. But it's money that works for you so you don't have to work. So then what would you do if you're a ridiculous, sickening work ethic? Well, then you do other things that make money, and then you put that money to work. Now, in this case, you got Forex. So let's boil it down to two different things here. Some people believe they can come into the Forex market, open an account with like $5,000 or even less, 500. And they see people on YouTube, and they're not even trading at a computer because they can't afford a computer. So they're only trading on their phone. They're like, yeah, the Forex lifestyle. I'm on a yacht. I'm at the pool, and I'm trading on my phone, and I'm getting rich. Boom. And then they go and buy a car with the $1,000 they made, and like, it's so amateur, and it's such a lie. It should almost be illegal. What you should look at is, how can you get money in your account to grow over time and produce more and more and more for you? Money is productive. Right? Money is productive, but it's slow. It compounds over time. But you do want to get to some point, right, Daniel? Let's say when you're 45, Daniel, how would you like to retire a very wealthy person? Are you willing to work hard and not spend the money on a fancy car between now and 45? Because I can tell you there are people here that are older than 45. And that sounds like the most amazing dream they've ever had. They're like, oh my God, if I could have retired at 45 and then enjoyed my money? So can you deprive yourself to 45? I told the story before, and I'm sure this pisses Max off, but I told the story before about the woman that worked for Jim Clark at Netscape. She was the number 3 employee at Netscape. Well, I hired her and I asked her, well, why do you want to work for me? And she says, well, first of all, you're doing interesting things. And Jim Clark, my mentor, told me I need to do interesting things to stay an interesting person, to stay creative, to stay focused. And I had to deprive myself of my $250 million. You see what I mean? He said, deprive yourself of the $250 million until you're 45, and then you'll enjoy your money because you lived a satisfying life versus just having a bunch of money and then spending it, and all her friends got hooked on drugs or spent all their money on stupid real estate or thought they were geniuses because they made so much money at Netscape, so they must be geniuses, and so they became angel investors and gave millions of this stupid company and millions of that stupid company and millions of that stupid company. All those companies went bankrupt, and they're like, oh my God, I'm poor again. Yeah, because you is stupid. Okay? So anyways, I want you to think about, right? Well, now, so Javier says, what if you're over, right? Well, then we need to increase your assets under management. So a young person has a disadvantage when they go to someone wealthy and say, hey, wealthy adult, give me your money because I can manage it better than you. It's a very difficult pitch. They have to overcome being young. And I lived that my whole entire life. I was always the youngest person in the room. So I had to work 10 times more to show 50-year-olds I knew more than they did. And they did not like it. Let me tell you, my whole young adult life was saying, I'm on another level and yet you're my boss. Okay? So if you're older, you can come across and say, well, I am so wise. I have a career behind me. I have knowledge behind me. I have experience behind me. So, right? So you might find it easier to get to the money. Plus, you're older, so you should have some money, right? You should be able to start with 100K instead of 1,000, right? Right? You start with 100,000 instead of 1,000, or 50,000 instead of 500, right? You should have more resources, but then you have different limitations, right? So remember, there's only 2 things that matter with how much money you make. That's assets under management and how much time. So you might have less time, but you probably have more assets under management. Either way, it works out. But the point is, you got to focus on putting your money to work, putting your money to work. So in my book, one of the things I talk about is this paradox I ran into when I analyzed the cash flow statement. So on a 4-year cash flow, pro forma cash flow statement I did for myself. And I still remember going, oh my God, the less I pay myself, the more I'm going to make. I didn't get that because that's different from all the venture capital stuff that I did as a younger man, right? It was different. So I'm analyzing Forex and I had a simple question. How much do I pay myself? How do I pay myself? Monthly, quarterly, annually, and then how much? So you have to have this mindset right off the bat that the less you pay yourself, the more money you're going to make. I mean, that's an amazing discovery, right? Anybody agree with that? That the less money you pay yourself, the more money you're going to make. Isn't that strange? I did that through deep self-discovery and hardcore analysis. It took me probably It took me days to create the cash flow statements. And then I looked at it and thought about it, and then I'm like, oh my God, the secret to being filthy, stinking rich is paying myself as little as I possibly can. Now, is that the same as, right? By the way, do you think I can afford to go out and lease a Lamborghini right now? Take money out of my retirement account, go get myself a Lambo. And then I can get on YouTube and pull up MT4 on my phone, right? And say something stupid like, I'm successful. Okay, there's my account. Yay! There's the same trading account that you see on the screen. Okay? And I'll put the chart if you want. Yay! I made all this money. I did it on my phone. I'm sitting by the pool. I have a beautiful yellow Lamborghini with black wheels. And this is the secret to success. But what is the message I'm giving you? Time and the amount of money you start with. And paying yourself as little as possible will only accelerate how hard money works for you. Would you like 1 employee or 1,000 employees working for you? That's how you should be thinking. You're like, oh my God, if I had 1,000 people all adding value, I would have something 1,000 times bigger than what I have now. You need to think like a true entrepreneur. You got to expand. You got to get big. You got to get ginormous. And what I'm talking about is money. But you take $3,000 out of your account to lease a Lamborghini, you will remain poor. And you'll have a stupid car that depreciates, and in about 5 years, it's going to look like crap because, like, who drives an old Lamborghini? Right? And now you're wasting, your $3,000, but then you're like, you're putting gas in it, you're insuring it, you're paying $500 for an oil change. Are you mentally deranged? You pay $500 for an oil change? You work for your car. Maybe because you have a nice car, women will love you, men will adore you. I wish I had a car like you, man. Right? You got to think different. You got to pay yourself as little as possible for as long as possible, and then you can stop working, essentially. Let's say not stop. You can throttle back on your hours and let money work for you. Money being all your employees. You might have 100,000 employees. You might have 1 million employees. Okay? And when your Lamborghini, you can buy a Lamborghini when it's free. Okay? And by the way, how do you do that? Take money out of your account. Don't pay yourself. Buy real estate that pays you income. Convert your asset. In your Forex account, it's producing income, but then convert the asset into a different income stream. Okay? Because you still have to work for Forex. You don't have to work for real estate. Renters pay you rent. Gardeners cut the lawn, right? And you pay a management company 10% of your NOI. Doesn't matter. And you just earn money. It just comes in. And when you have, right? And when that might be enough. You might be able to get your Lamborghini and have renters pay for it. Okay? You understand? Because now you're just converting cash into a different asset because you're like, well, I got to spread my risk because you still have to work in Forex, right? If you bought a bond that pays you 5%, you don't have to do any work. So that's when you can get a Lamborghini. When money is making money, you can buy a yellow Lamborghini if you feel like that's going to fulfill some inner desire to say, look, I've really made it. I worked really hard. I deferred my pleasure for a decade. Now I can buy a yellow Lamborghini because it's nothing. By all means. Okay? So how much should you spend? Well, let's talk about that. And then I think we'll call it a day because I think I've gone too long. How much should you pay yourself at the end of the year? Well, let's talk about that. If I gave you $1 million, what would you charge me? What percentage of the profits would you charge me? I gave you $1 million. Hussein's like Aussie Swiss. Yeah. The answer to that, Hussein, is yes. Jim says 20. Nailed it. That's perfect. The standard operating procedure is 220. But you're going to find a lot of people hesitant to pay you management fees. So let's just say 20%. That is the standard operating procedure. But you'll probably find that people will even want to just pay you even less, 10 or 15. But the standard is 20. Okay? That's just the base mark. If you're charging more than that, people are like, you better show me 5 years or 10 years or 20 years of hardcore awesome returns that I'm looking for. Not big returns. The returns they're looking for, steady income with low volatility. Okay? You ain't there yet. So now to be normal, you have to charge 20. To be competitive, you have to charge less than 20. But the standard operating procedure is 20. Okay? Great. You should live off 80. No, let me say that again. You should live off 20% of your annual returns. Like you would charge a client, that's how much you pay yourself. 80% of all your profits should remain in your account this year. 80% of your returns should remain in your account next year. 80% of returns should remain in your account 3 years from now, 4 years from now, 5 years from now. And at that point, you're probably making good money. If you can hang on and do it in year 6, in year 7, you're only paying yourself 20%. You're growing your account. You're saving 80% of your returns. If you can do it in year 6, in year 7, year 8, year 9, year 10, you couldn't even spend your money. Lamborghinis are falling out of the sky. At that point, you should take your money and not buy a Lamborghini. You should buy commercial real estate. You should buy an apartment building. You can have a yellow Lamborghini when you retire. You're so freaking rich that you don't work. You're like, I don't even want to get out of bed and walk to my charts and trade this Kiwi Swissy anymore. Because it doesn't matter if I made an extra $10,000 today, it wouldn't make a damn difference to me. So you're like, you know what, I'm done. And where's my freaking yellow Lamborghini? And now you go out and you're just done. You don't even ask what it costs. You're like, this one's beautiful. Got it. Wrap it up, put it a bow. Now I can feel good about myself. Why? Because you worked 10, 15, 20 years like a dirty dog, and now you don't even think of money. Because you were able to defer your pleasure, and your reward is so ginormous, you can't even comprehend it right now. Because what will happen is you'll get there, you'll be such a different person, you will chuckle and say, I remember those days when I thought this would make me happy, or I thought that would make me happy. And you'll just be such a radically different person that you'll be proud of who you are. And you'll have that inner satisfaction, that inner strength to be kind, a true happiness from caring and sharing your success with the people around you. Right? And then go back and look at that yellow Lamborghini you want today, and you'll laugh at it. You're like, oh my God, it looks like a piece of junk. Okay? You buy yourself a $200,000 Lamborghini. What's it cost you? $200,000 leveraged 100 to 1. I guess I got this off, so I gotta go. Hang on, I know that's not correct. That's what you're paying. That's what you could afford in the Forex market, but instead you bought a cheap Lambo for $200K, plus you're maintaining it and sharing it and garaging it and keeping it clean. Or you could just have this kind of leverage, because remember, you're 200,000 times 100 to 1. So now you have access. You could drop a $20 million bomb on the market. Well, I wouldn't recommend it, but you could, right? So you could control $20 million and be a big shot and talk to your friends today. You're like, yeah, I dropped another mil on this Kiwi Swissy. They're like, another million? You're a baller, dude. You're like, yeah. What's more impressive? Controlling $6 million worth of Kiwi Swiss franc, and you're talking to your friends about your $6 million position? Or you're driving around in your depreciating asset that has no income and only cash outflow? Right? You got to get the game set. And I'd say everyone over 40 probably gets this, right? Everyone under 30 is still, right, got the wrong dream. So anyways, you want to do this the rest of your life. Correct? You want to trade Forex as long as you possibly can. And it's going to fund everything you want to do until you don't want to do anything. Yeah, that's what I'm saying, right? Aside from the yellow Lambo, if you want a $100,000 car, go buy yourself an asset that nets you $5K per month. Yeah, and you don't even need $5K for a $100K car. That's an average car, right? Probably only cost you $1,000 a month. It's nothing. But the thing is, your money is supposed to make you money. Buying a car is the dumbest thing you could do. Now, I did it in college. I would get student loans. College back in the 1990s. So imagine young Wayne McDonald and I'm 21. I'd get my student loans from my school, right? I'd literally get a check. I'd cash the check. I'd go to car auction. I'd buy 6 cars. Then we'd have to go to an old folks home and talk to the old guys like, hey guys, what are you doing on Saturday? I need some help. I need some guys to come with me and pick up the cars I bought at this car auction. They're like, that's cool. I'm like, I'll give you $100 and I'll buy you breakfast at Denny's. They're like, yeah, that's good. Got to get out of the house anyways. They're like, oh my God, I haven't been out of the old folks home in like a month. So yeah, good. Come with me. So we'd go to the car auction. I'd pick up my 5, 6 cars. I'd drive home, right? I flip them all and doubled my money. Paid my student loan, right? And then took the money and traveled the United States and traveled the world. What happened there? My money made me money. Now I had to work and hustle and be smart, but you're smart, you're focused, you hustle too, right? Now you got to back yourself with money that makes money. Okay? Your money works for you. It's an employee. It's a tool to put to work. You never spend your money. Never, ever, ever. But the thing is, can you deprive yourself of that short-term happiness, that instant dopamine? How many times have you heard about like some guy on Wall Street, he's making $3 million a year and he burns it on cocaine and hookers? Models and bottles, baby. Yeah. Doesn't lead to happiness. So you need to be like the woman that worked for me. To lock that big money aside out in the future. You understand? And you need to focus on being interesting, being passionate, being focused, being creative, and defer that pleasure as long as you possibly can. What do you mean max? What do you mean scam the student program? They cut me a check. They're like, would you like to borrow money to go to college? Yes, I'd like to borrow money to go to college. There's no scam. They cut me a check. I cashed it, I doubled it, and then I paid my loan. I don't have student loans. So that's what I'm saying, guys. Can you defer the dopamine? Because that's what happens when you put cocaine in your system, you put sex into your system, and alcohol and food and all these different things. It just produces dopamine. Can you defer your happiness and say, in 25 years, you will allow yourself the pleasure of accessing your wealth, but your money will be working so hard for you 24 hours a day, taking care of all the piddly things in your life like bills. Okay? Focus is, how did you find buyers for the cars? So back then you had to take out newspaper ads. So I took out newspaper ads and people started calling all the time. You got to remember, I'm a student and I'm never home, right? So I was the first person to have a cell phone. I had a cell phone in 1991 or something. And then I got 2 cell phones. Because I had so many ads. People would call in. They're like, yeah, I'm calling about the car for sale. And I'm like, yeah. And they're like, what color is it? I'm screwed right then and there. I don't know what color it is. I got 6 cars. So if they called here, this phone has, right? This car has the white. This phone, if they call this phone number, it's a white car. If they call this phone number, it's the blue car. You understand? So I have 2 cell phones. It had a little pop-out. It didn't fold. It didn't do nothing. So I had multiple cell phones so I could be mobile and boom, 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 boom. I've owned hundreds of cars in my life. That's why I don't own a car now. Why would I own a car? Stupid. So anyways. So, I want you to think about this. If you're serious about achieving success beyond your wildest dreams, are you willing to take your ridiculous, sickening work ethic, which I know you have, and then grow the money that works for you like it's a workforce. Expand your business and get big and get bigger and bigger. And by bigger, I mean assets under management. And you can grow your money or you can grow other people's money. But the secret to this game is assets under management and then being conservative and disciplined and keeping your losses small, keeping your volatility low, and letting all your winners run. And do it for years and years and years and years, all the while saving at least 80% of all your income into Forex. I just gave you the secret, man. That's it. I'll see you tomorrow.